That takes us to warranties. Warranties are also an estimated liability. Same principle applies to basically everything in this chapter. Expense in the year of sale, not year of repair. Say you manufacture and sell TVs with a 2-year warranty. We're going to make life easy. On January 1, you sell 200 TVs to a hotel chain that opens in Edwardsville for $800, and do be careful to see if it's each or in total. So this is 200 times 800. The cost to produce the TVs are $350. You estimate that the repair costs over the 2-year period generally run 2% of the sales price. And sometimes it's a percentage, sometimes they'll give you a dollar amount. But when we make that sale, we really have a whole lot of things that we have to do. The first one, you know really easily. I have cash and I've got sales of, 200 TVs at $800 each. So that's 16 and 4 zeros. The other thing you do, anytime you make a sale, you also have that cost of goods sold. Sometimes they'll give you the information. If they don't, then you don't make this entry because you don't know any better. And that is for $350. That's the cost. Better be less than this or you made a mistake. $350 times 2, 35 times 2 is 7. Now I also have to estimate my warranty and read carefully because all of the problems are different. This says 2% of the sales price. Sometimes they'll say 2% of the cost. Sometimes they'll give you a number. Read carefully. So 2% of the sales price. So my sales price is $160 times 2%. In real life, you look back at your history of your company and see what repairs look like. And that's part of what the auditor is going to come in and do is see if that's reasonable. I'm going to have warranty expense and either warranty liability or warranty payable. I don't care what you call it, but you do have to always put those in there because there's no such thing as warranty. Do that in the year of the sale at exactly the same time as the sale. You know that the minute you sell it, you not only have the cost of goods sold, but you have the cost of all the warranties that might be incurred because of that sale. Let's say on March 22nd, we have 3 TVs that are defective and we want to replace them. If I'm replacing them, do I replace them at the $800 number or the $350? How much does it really cost me to replace them? It really cost me $350 times the 3 TVs. That's how much I'm out. So that's $1050. Remember, I expense those up here. So what I want to do is when I actually do the repair, that's when the payable or the liability goes down. And then in this case, I'm sending them out some inventory. And that should make sense. The $350 is what the inventory is at. So when you make the repair, and this again makes a great multiple choice question, there's no expense. The expense happens up when you make the sale, not when you make the repair. The other thing that can happen is instead of repairing it, you either reimburse for the repair. Say this is $1,000. The Marriotts just repair their own and then they send you receipts. Still warranty payable. All that changes is the credit is now I'm sending them cash. Again, just read carefully when you do a problem. It will either be inventory or it will be cash. Warranties, again, are estimated numbers, and they're kind of a form of contingent liability. And what we mean by a contingent liability is it's payable under certain circumstances. And so that means it's contingent. I will have to pay it if certain things happen. If certain things don't happen, then I won't pay it. Some things, I think it was last year, Macy's had a big security breach. You hear about, now you hear about them so often, it doesn't even like pique your interest. But Facebook had a security breach. Whenever there's a security breach, It's contingent costs. Depending on the severity of it, we'll probably have some lawsuits. We have to get some kind of protection for customers. So there's going to be some other costs that will be involved. But again, those might be 1 or 2 years down the road before we really know how bad the security was. In Monsanto and Roundup, we have some environmental lawsuits out there. And if you watch any of the commercials, if you sprayed a lot of Roundup, give the lawyer a call because they're looking to sue. And again, those lawsuits might not show up for years and years after the Roundup was actually purchased. You guys are probably too young to remember the BP oil spill, but one of the oil rigs in the middle of the Gulf spilled millions of gallons of gas all over the Gulf of Mexico. And so again, that happened in one particular year, and they're still paying for that. The most common one are just any kind of lawsuits. The whole point is we want to book the expense in year the event happened. So not when we pay it out, not when we lose the lawsuit, but when we poison the people with the Roundup, when they bought the Roundup, when we had the oil spill, when the security breach, not when we eventually paid them out. Or again, in the case of lawsuits, when the person slipped on our property, not when the lawsuit is settled, which is again, often years and years down the road. We have 3 different categories. Remember, we had the word probable in the definition of a liability. If it's probable that you'll lose the case, then we need to book it. We're going to hit an expense and a liability. If it's only possible that we lose, then we're going to disclose it. Something we don't talk about much in this class is there's a bunch of footnotes. If you actually go to an annual report, there's 3 pages with the income statement, balance sheet, statement of cash flows, and then there's 50 pages of explaining all the numbers. Those are called the footnotes. If it's possible that you're going to lose, you put it in the footnote. And if it's remote that you'll lose, and again, if you're a lawyer, you call that a frivolous lawsuit, like we do for anything that's stupid. We just ignore those. The only problem with FASB is they set these rules up. They sound pretty easy. They never defined probable, possible, and remote. So there's some discretion in those estimations, but in problems, we always have to tell you. It's probable we'll lose a case for $500,000. That's some kind of expense. I'm going to call it lawsuit expense. And there's some type of contingent liability. And I'm just going to call it contingent liability, but you could call it lawsuit liability, just some kind of liability. So look for something in those drop-down menus that makes it clear it's a liability. Another thing that makes for a nice multiple choice question, if it's probable, possible that you'll win, and this is with a surprise one, you just ignore it. We don't book contingent gains. Again, this would be, and sometimes this is called a loss. So sometimes it's loss on lawsuit or expense. But we don't book revenue, we don't book gains on a contingency. That we don't think, that goes back to that conservatism principle where that's just too easy to manipulate. You talk to the lawyer will always say, well, yes, of course we're going to win. Going back to this example, if it's possible that we'll lose that 500, we'll footnote it. If someone filed that frivolous one, so it's remote, and again, in problems, you got to just look for those 3 words. So if it's a remote, we'll lose, we'll ignore. Who decides? You get advice from your attorneys. The auditor will review to see if it seems to make sense to them. And then the last little thing that makes, again, a nice little multiple choice. What if there's a range? If you ask a lawyer anything, they'll say, we're going to do 500,000 to, let's say, 2 million. We cannot book a range. And this answer is counterintuitive. The amount you book in US GAAP is the lowest number in the range. Is that conservative? No, this would be the conservative, but we would pick the 500,000. The reason is this is the probable amount. This is a possible amount. That's the argument. That makes for a nice multiple choice because that is just not what you would think. That's all there is to current liabilities.